Most traders know about the straddle, strangle, but almost none know about the strip option strategy. Hi everybody, welcome to the video. The VIX is been very low and I see nobody talks about the strap option strategy. So guess what? I got to talk about it. Not just I'm going to tell you the strategy, I'm going to tell you the adjustment as well. If market go up, down, if market stay where it is. It's gonna be a little advanced video, so stick till the end of the video. One call, two put, and we're gonna have a strategy ready. Let's learn everything about this strap option strategy. Low VIX, let's understand how to trade it. So here we are on an option simulator. One thing must really strike you in the low VIX. VIX levels are currently 10. So it's gonna have a direct impact on the popular strategy. Here I've got a straddle example for you. One thing which I like to tell you that this is 40 days to expiry. This is the monthly October series expiry. And what do you see? Look at the break even. It's hardly any range here. This is happening because of low VIX and not just the straddle. Most of the strategy which are credit make the range right now and you will relate to exactly what I'm telling you. In fact, if market moves in a low VIX environment, and we have just seen what happened recently, that means only one thing, it's gonna get more challenging. Low VIX is a situation where we got to handle it delicately with different strategies. So here we go, we're gonna start what exactly is a strap option strategy. So what we're gonna do is we're gonna combine the put and the call together. That will be our starting point, and after that I'm gonna tell you some good adjustments. Now here what you see, the market is currently trading at 25,400, roughly 384. So step number one, we go slightly out, slightly down in the market, and we buy two puts, obviously out of the money, and we are buying it the monthly series because monthly series decay is lesser comparatively to weekly. After that, the step number two is we are going slightly out of the money and now we are buying one call. So two puts and one call when we make it in the same series. This is called a strap option strategy. If you do exact opposite of it, that means if you long one put and long two calls, that will be strip option strategy. This one is strap because we take a view which is slightly more bearish. Now things are getting started, things gonna get more interesting from here onwards because strategy creation is just 30% of the job. That is done. Now let's talk about some good parts. Now here VIX is already low. So these kind of strategy which are debit strategy, if market move in any direction in the low VIX, remember when we trade low VIX, the theta decay is low because the premium which we are paying is low. Now here, three things must strike you. Only three things are going to happen with the market. Number one is that market can really rush down, any kind of a gap down like we saw lately. It's a very economical strategy, as you can see in a simulator around 54. So that means if market move any kind of a gap down, we obviously expect the puts to come into action. If market really go up fast, then we can expect call to be in action. Now, this red zone which you see, this red zone will come into effect only when we hold the strategy for entire month. I mean to say 40 days if we hold the strategy and market just doesn't move anywhere. Then this red zone is going to come into the picture. Now, let's take each and every situation one by one, exactly why you come on this channel, because we're going to talk about different things. We're going to go more deeper, right? Ready? Let's talk about it. For example, now, if market starts to go down from here, obviously we expect the puts to come into action and the 265 premium we expect to go up. If market continue to go down, then it's a no-brainer. We know what we can expect from the strategy. But market seldom behaves the way we want it to behave. So usually what can happen is market can have certain kind of a down thrust because VIX is already very low. If market go down and then if market start to go up from here, so it show you a little positive. And after that, market starts to go where market is. Then how do we lock the profit is something which is going to be very interesting. If we take the strategy and if market go down, then what we're going to do is we open the same option chain. And remember the put which we bought. We bought the put which is 25,300. All we can do is we can probably short the next strike, which happens to be 25 250 put one lot. Now what's the advantage of doing it? By the way, if market go down, this premium which you see of 285, this is expect to jump up, probably 350, probably 340, something in those lines, can be higher or lower, because we are running a simulation. And I want to tell you, if something like that happen, if market go down a bit and you sell this premium, now two things gonna happen. If market continue to go down, then obviously we can have the expectation. If market go down and if market go up, then the put which we sell, which is currently 245, this put is what we selling it at 320, 340, this is gonna give us more credit. So down and up can be handled in this. Point number one. Now I know what all of you are thinking. If markets start to trend, then obviously we can expect some kind of a favorable return. So let's go to the original now. The main thing starts if market stay where market is. If market do not move, then what are we going to do? We're going to deploy a strategy which you already know. Let's see what is the solution of this. I'm sure you're very interested to know it. So here we go. This strategy is, I'm sure, familiar to all of you. This is called iron fly. Very easy to make it, and probably the top strategy which retail trades, in which we short the straddle and then we buy the wings. Now obviously, because VIX is very low, so we are not getting the kind of range which we used to get in fly. But the fly is a strategy which comes out to be favorable for us if market do not move anywhere. And if market picks up a direction, then we could see that because we bought the wings. So you can see this red line is flattening over here. Now I have an idea which is slightly out of the box, right? Because ultimately what we want to do when we trade is that we want to get all the situations. We can try and make the best of all situations in our favor. Now here is a food for thought for all of you. If we trade this strategy, hypothetically, trading contains risk to capital, you all know. But if market do not trend, this iron fly, if we combine it along with this particular strategy, which is strip, if market do not move for, let's suppose, 4 days, 5 days, what do you think will happen with iron fly? Iron fly, if market stay where it is, right at the peak or somewhere around here, this expect to get some theta decay benefit. And this is supposed to lose the theta. Probably that is the reason why we are doing 1:3, is that we are selling 3 and we are buying 1 set, 2 puts and 1 call. Can be very interesting. Now I'm sure you want to know the next step, that is, why don't I combine both and I show you? Okay, let me show you that. And then I'm going to tell you, if market stay where it is and then market go up, what is the solution for it? It will be very interesting. Let's talk about that. So exactly this is what we have done. The earlier 2 legs were of the strip strategy, which is the topic of today. We are adding an iron fly, the exact same strike which I showed you here, exact same quantity, 333 lots and the same strikes. When we do something like this, remember it's 1 set versus 3 sets of iron fly. And as we all know, iron fly, because it's a hedge strategy, so it doesn't usually ask for such a high margin. We are doing it in the same series. If market stays where market is in this situation, and we have 2 strategies running simultaneously at the same time, if market starts to trend on the downside, right, what do we expect? We expect the strip strategy to take care of the put side. If market stays where market is, then obviously we would like to reduce the damage which we can have from theta. Iron fly can come pretty handy for you. I'm sure this is ringing some kind of a bell, isn't it? When you combine 2 strategies and you try to get the best of both the strategies, obviously risk cannot be 0, but risk can be reduced. Now I'm sure what you want to know is, if markets start to go up, then what we are going to do. So I'm going to tell you that. Now let's talk about the issue which we have on hand, that is, if market go bullish on us, then what is going to happen? I want to tell you one thing again, that this red zone which you see, this is only if we hold the trade for 40 days. But are we really planning to hold the trade for 40 days? I do not think so. If markets start to go up, then maximum people look to sell the put to get some kind of a credit, which can be not so good idea because the premium is going to be low. You're not going to get that much of an edge. Number two, if you sell 3 put, then it's going to ask you for a lot of margin. So that not be a good idea. So far what we have covered in the video, if we take the strategy, if markets start to go down on the bear side, it's good, right? If it continue to go down, then strip strategy is there for. If market go down and if market go up and you want to lock some profit, always sell out of the money put is what I told you, I think few minutes back. Number two, the main issue at hand is if market stays where it is, iron fly is, and there's so many adjustments of iron fly. On my channel, you can also find something different. But if market starts to go up and suppose market is breaking some kind of a resistance, obviously we can always have a stop loss placed in our trade. Always remember that, right? But if we have to adjust and we don't want to pay a lot of margins for this, we can look to long futures. That's right. We can always look to long futures if market go bullish. Now, when we long future, let's see how things look. If market suppose come here, naturally, the P&L will show us some losses, I want to tell you, right? But this line which you see, which is going up steeper, this future when you long, you're basically turning your neutral to bearish situation into complete bullish. That is something which also can be done. Or there's something maybe a little better which we can do. If I tell you that video is going to be even more longer, and this is slightly advanced concept. Although we try to combine two simple strategies, remember in the low VIX environment, and we try to tackle sideways, bearish and bullish by just doing one adjustment in one video which you're learning right now. Let's talk about VIP points now. What more can we do? Because remember, know the low VIX environment and trade logics. If VIX is 20, VIX is 15 even, the strategies which have an advantage on a high VIX, those strategies naturally will not have that much advantage when the VIX is really low because premium, the theta decay speed is very less. And if you've been trading from past 1 week, I'm gonna ask you, how was your experience? When market show volatility in the low VIX, that becomes a very different situation to handle. That asks for a different kind of a skill set, different kind of an adjustment, different kind of a mindset, which obviously can be learned. So I will not recommend to have one payoff in which we have iron fly and we have strip. I'm just showing for demonstration purpose so that you have a clear idea when you watch the video, you can visualize it. But iron fly is always to be treated differently. Now, why do I say that? Because iron fly, we can adjust it so many types. On my channel, you can find it, how to adjust an iron fly much more effectively. So iron fly is required to be treated as a separate strategy. When we enter into a strategy, two possibilities. One, things will swing in our favor. Then that's quite easy. All we got to do is square off the trade. But if things go against us, the second possibility, then we got to adjust it. We got to make sure that all Greeks, we can neutralize it as much as we can. Also, I've made a recent video about calendar low VIX strategy and the adjustment. It's for busy people, it's for working people. You can watch this video. Really, that adjustment is something which you can look to learn for low VIX. It's right there on the YouTube. I'm going to put a thumbnail. And if you trade calendar spread, and if you do not know that adjustment, which I discussed in the video, once you learn it, you will come to know. Thanks for watching, and I wish you all the very best. Take care. Bye-bye.